Hi, and welcome back to A Smarter Way to Retire. I'm Tony Leonardi, your host and certified financial planner professional, here to help you build the retirement of your dreams. 2 weeks ago, on April 15th, we took a wild ride through the history of the federal income tax. Al Capone, the 94% rates, the works. If you missed it, check it out at leonardifamilywealthcare.com. Today, we're looking forward. Tax season just hit, and with 2025 in full swing, it's time to get tax smart for your retirement. We're talking 5 game-changing moves to save you thousands, plus a sneaky deadline looming in 2026 that could shake things up a bit. So grab a coffee, maybe a notepad, and let's dive into making your retirement dollars stretch further and further. Taxes aren't just an April headache, they're a year-round challenge that could make or break your retirement lifestyle. Whether you're dreaming of beach sunsets or teaching your grandkids to fish, every dollar you save on taxes is a dollar for your future. Here's the deal, up to 85% of your Social Security income could be taxed. IRA withdrawals hit as regular taxable income, and required minimum distributions at age 73 might shove you into a higher tax bracket. Plus, the Tax Cuts and Jobs Act expires next year in 2026, which could bump the top tax rate from 37% to 39.6%. As a CFP practitioner, I've seen retirees lose thousands by not planning ahead. Today we'll fix that with strategies straight from my book, A Smarter Way to Retire. So let's get started. First up are Roth conversions. If you have a traditional IRA or 401k, those funds are taxed as ordinary income when you withdraw them. But what about a Roth IRA? Tax-free growth and tax-free withdrawals. So here's the play. Convert some of your traditional IRA to a Roth IRA in 2025, while tax rates are still lower. You'll pay taxes on the converted amount now, but it's like buying tax-free income for your future. For example, I use a system called MoneyGuidePro to help me crunch the numbers. And it might show, for example, a client converting $50,000 in 2025 could save $10,000 over a decade if rates rise. Just watch your tax brackets. Don't convert so much that you jump from, let's say, a 22% bracket to a 24% bracket. Talk to your advisor to run your own numbers to see if this makes sense for you. Every situation is different, and you have to run your own numbers to make sure it works. And check out our 2025 Retirement Reset Checklist at leonardifamilywealthcare.com for more information. Move number 2 is timing your withdrawals. If you're retired or semi-retired, you've got some flexibility. Take IRA distributions in low income years, like when you delay Social Security, for example, or have fewer side gigs. This could keep you in a lower tax bracket. For instance, a couple in the 12% bracket could withdraw $20,000 tax-free up to the standard deduction, which is $29,200 for joint filers in 2025. But pull too much, and you're now into the 22% bracket. I had a client who saved $4,000 just by spreading withdrawals over 2 years. So we use a tool in my office that helps crunch the numbers called MoneyGuidePro to test out different scenarios. So find a tool that works for you and grab our checklist on my website to help map out your withdrawal plan. Move number 3, what we call qualified charitable distributions, or QCDs. If you're 70 and a half or older, you can donate up to $105,000. That's $105,000 per person directly from your IRA to a charity, tax-free. It counts towards your required minimum distribution, but doesn't hit your taxable income. Say you have $20,000 in RMDs and you give $5,000 to your church. That's $5,000 less taxed at, let's say, 22%. That's $1,100 back in your pocket. CDs are a win-win. You support causes you love and reduce or avoid taxes. Check with your advisor to make sure you set it up right, and see our website again for a QCD guide. Let's hit pause for a second for a fun tax tidbit. Did you know that you can gift $18,000 per person in 2025 tax-free? If you're married, husband and wife can each give $18,000 to as many people as you want. That's right, give your kids and or your grandkids cash for college, a car, or a head start, and it's off the IRS's radar. No gift tax, no hassle. I've got clients funding 529 plans this way. It's like a tax-free high five to the next generation. Back to our moves, but jot that one down for your summer holiday plans. Move number 4 is bunching your deductions. The standard deduction is $14,600 for singles, $29,200 for couples in 2025. If you're close, bundle expenses like charitable gifts or medical costs into 1 year to itemize. For example, a client doubled her donations in 2024, $30,000 in deductions, and saved $2,500 over the standard deduction. That was in 2024. Then she took the standard deduction in 2025. It's like a tax yo-yo. Plan it with your CPA or your advisor. And our checklist at LeonardiFamilyWealthCare.com has a deduction tracker to make it easy. Move number 5, consider lower tax states. Think about where you retire. States like Florida, Nevada, Texas have no state income tax, unlike high tax states like California or New York or Connecticut. Relocating could save you 5 to 10% on state taxes annually. One of my clients moved from New Jersey to Florida and saved $15,000 a year on pension and Social Security taxes. You're not ready to move? Well, look into state-specific deductions like New Jersey's senior exemptions. Run the numbers with your advisor and grab our state tax guide on our website. Before we wrap up, here are 3 questions to spark your 2025 tax plan. Have you stress tested your RMDs for tax hits at age 73? A big account could cost you thousands. Could a Roth conversion or QCDs, qualified charitable deductions, save you before rates rise in 2026? Time is ticking. Are you working with a CFP professional to simplify your tax strategy? Don't go it alone. Jot these down, talk to your advisor, or reach out to us at LeonardiFamilyWealthCare.com. These questions could unlock your smartest retirement yet. So that's our playbook for tax smart retirement moves in 2025. From Roth conversions to qualified charitable deductions to low tax states. These strategies can save you time, money, and stress. Remember, taxes are a forever problem, not just an April problem. But you've got the tools to fight back. Download our free 2025 Retirement Reset Checklist at LeonardiFamilyWealthCare.com to get started. And please refer to our website for full disclosures and more resources. For more tax strategies, I recently recorded a deep dive webinar on 2025 tax planning that you can find on my website under the webinar tab or on my YouTube channel, Leonardi Family Wealth Care. Thanks for tuning in to A Smarter Way to Retire. If this episode got your wheels turning, subscribe to the podcast, leave a nice review, we love lots of stars, and share it with a friend who's stressing over taxes. Got a tax question or a retirement story for us? Send it to us at LeonardiFamilyWealthCare.com. I'd love to hear it. Until next week, keep planning smart, and here's to your best retirement yet.
Securities and investment advisory services offered through Osaic Wealth, Inc., member FINRA SIPC. Osaic Wealth is separately owned, and other entities and/or marketing names, products, or services referenced here are independent of Osaic Wealth. The opinions expressed herein are for general information only and is not necessarily the opinions of Osaic Wealth or its representatives. Investing is subject to risk, including loss of principal invested. Past performance is not a guarantee of future results. No strategy can assure a profit nor protect against loss. It is not intended to provide specific advice or recommendations for any individual. Please consult your financial professional, attorney, or tax advisor with regard to your individual situation.